Hi, hello everyone, and welcome back to Raul the Realtor, Raul your favorite broker, real estate coffee break. Like every Wednesday, we're here with you, bringing you free education. It is my commitment to you to be here with you every Wednesday. I'm bringing free education, so make sure to spread the word if you're in the search or in process of getting a home or selling your property. This is the channel to tune in and get yourself educated and get free information and perhaps use our services as real estate professionals. So, in today's topic, we're going to talk about real estate property taxes and what that does to your monthly payment for said property. But prior to that, let me just read this quick excerpt before we get started. New Jersey Community Capital, its affiliates and subsidiaries, and their agents, employees, officers, directors, members, and brokers are not offering legal, tax, or professional advice in this video, and none should be relied upon as such. The content of this video is for informational purposes only, and viewers should seek legal, tax, and professional guidance from an attorney, accountant, real estate agent, or broker, or other appropriate experts before taking out actions. Viewer assumes all risks associated with any actions taken as a result of this informational content. All right, now that we got that out of the way, let's go ahead and dive into today's topic. In today's topic, we're talking about real estate property taxes. Do we control those? Could we keep those at a steady rate? So, what's happening in the great state of New Jersey? Why are taxes increasing year over year, right? So, just to give a little context, last year's average property tax was around $10,000. That was for 2025. The new numbers for 2026 is an average tax rate or property tax of about 10,570, which means it's an increase of about $570 for the the overall tax rate for the great state of New Jersey. Remember that the average tax rate is not the individual county tax rate because those vary per county. So every county or municipality will have its own tax rates or its own taxes. So you may find taxes that are lower than the 10,570, but it's county, right? So what does that do? That increment of 570, what does that do to your monthly payment? Because many clients will call and ask, why is my monthly payment increased now? Because I've borrowed a loan or I got a mortgage note, for example, of 500,000, and when I sign all my documents at the day of closing, my monthly payment, for example, just throwing a number out there, was $1,700. But this year, now I'm faced with a $1,750 payment. Why the increase? Well, like I said, property taxes is something that we can't control. I opened it up with that, right? Because property taxes are not controlled by the mortgage. It's something separate that is by municipality or by county. And then what happens is the tax rate is depending on the property, it gets assessed by the tax assessor of that municipality. They look at properties that are similar to yours, and then they give it a tax rate depending on the finishes or the size of the property and other factors. But the more important part of this is the increase. The increase is something that keeps happening or keeps occurring. And unfortunately, there's nothing us as property owners could do to halt the aggressive tax rate that is happening throughout the states. There are certain properties now that will pay above the 10,570. So there's properties now that are paying between 12 and $14,000 in property taxes. It's becoming less affordable. That's the point here. You know what I mean? That the properties and the payments are becoming less affordable. So squeezing us, the middle class, we're getting squeezed, right? Because now we can't afford such property, right? Because now we have to factor in these extra additional um, payments that we're going to need to make, to own property. So it's always important to stay tuned to what's occurring what's happening as far as the taxes. So that way, okay, I need a single family property, a tax rate, let's say in the average tax rate between, let's say, depending on the county that you're looking at, if you get lucky, let's say that you get something that has a 9 to 10,000 tax rate, that's a single family structure that's offering you, let's say, 3 bedrooms, 1.5 bath, an unfinished basement, and a nice yard, the typical American dream home, right? So that's what we're talking about here. How can we stay ahead of this, right? So timing is very important. Like right now, it's a great time to either buy or sell your property. And the reason why is because the mortgage rates are lower now, lower than before. So like the climate is definitely in better conditions now. So if you were on the fence and were looking to either sell or purchase your property, I would say right now is the time. And don't forget to contact us at 201-234-2639 so we could help you with that process. So yeah, if you are in that stage where you are considering, is it now? Is it later? Should I wait for property taxes to go down? Unfortunately, guys, property taxes are not gonna come down. Once they go up, they don't come down. There's different times of the years where you could um, appeal your taxes, right? In April, you have a chance to appeal your taxes with the local tax assessors, and try to see if you could, get a better tax rate and such. But it's atypical for property taxes to go down. The mortgage payment that stays static. When I say static, that means that it stays the same. Your mortgage note payment, say if you borrow that 400 and you borrowed it at a rate of 5% a year, that 400,000 or that's the $1,500 principal that goes back to the loan, that will always stay the same. So that doesn't change. What changes are other factors such as your home insurance, your property taxes. Those could change because, home insurance is private, right? So if you want to insure your asset and the bank is going to require it if you have a loan on it, the prices of insuring has increased, because, flood plains have been expanded, natural catastrophes more are happening. So like the consensus, at least here in this state, it went up 25% overall. There's been an emergency freeze call by Mickey Sherrill, our um, new governor. She has declared state of emergency because it's unbearable for us, the middle class, right? We have high electric costs, high property taxes, so it's crumbing us, right? So there's things out there that are coming to help us. There's programs out there that you could seek, or things that you could do to keep your monthly expenses manageable, right? So those are some factors that are outside of your static payment that could influence your monthly payment, right? So home insurance, because it could increase, we can't control that. And then also property taxes could influence your monthly payment. And once property taxes increase, very hard for them to decrease. Same thing with insurance. Once they go up, it's atypical for them to come down. So those are some points, because there's a few things that go into your monthly payment, but those are some points that make up your monthly payment and what could make them increase or irregular from one year to the next, right? From one year to the next, you may see that the payment has increased. And you could contact your mortgage lender. Let's say if you borrowed, because there's ways to decrease that monthly payment, right? Because we cannot control the property tax. But Raul, what can we control? What can we do? How could we lower our payment? Well, simple, guys. Right now the rates are lower, right? So let's say that you borrow your money or you borrow your mortgage note at a 7% rate. Even if you do it today, and you decide to refi or decide to rework your loan with your lender, you might be looking at a lower rate, which could mean a decrease in your monthly payment, which is something that you could do now or you could do in the future. Because, like I said, real estate is such a great asset that gives you the ability to do that, to borrow against it, to refinance it, to take money out of it, depending on how much equity you have in it. So yeah, there are things that are out of our purview and out of our control as owners, or or as buyers, such as the property tax rate, and again the insurance of insuring your note. If you have a mortgage insurance, that may increase or may not increase depending on your situation. So there's different things that you could do. And oh, guys, let me not forget. Make sure that you like and share this video so our community keeps growing. And every Wednesday, we could continue to come and bring you free education and provide to you more knowledge. And that way, you as buyers or sellers could have, greater education with you at the time you decide to sell or purchase your real estate property. At this time, let's take a little minute to take a little coffee break because this is what this is all about. So let's take a little break. Yes. So now we may continue. And if you haven't, if you're just joining us now, today's topic again was about the average real estate property tax in New Jersey, the increase from 2025 to 2026. In 2025, average tax rate was about 10,000. Now, 2026, now the average is 10,570, which has increased. So yeah, welcome to our community for all of those that are joining us now. And if you are new to the community, please make sure that you follow us, like and share our videos, so that way we could continue to grow and I could continue to come and bring you more free education every Wednesday. Again, how the question was, how can we then decrease our monthly expenses as far as, what can we do if we can't control the property tax or we can't control the home insurance prices, right? So what we said was, what can we do, right? Like what are our options? There's always options. So the option is you could always refinance your mortgage note. So let's say that you got it at a 7% and you decide to refinance it at a different time to decrease the interest that you're paying to the banks. Then you could do that. You have that option. You have that within your purview of things that you could do. Um, there's things that we are not going to be able to control, right? Like I said, the property tax is something that we are not able to control. Um, but there are programs out there. There's programs for people that are 55 and older. They could apply for different programs throughout the state to reduce their tax rates. So there's different options for people out there. But of course, if you are in process of purchasing or selling a property and you don't know um, how to do it or what to do, just make sure that you contact us so we could give you the right guidance. And you could always call us at 201-234-2639 to seek our professional guidance. Also, the property types also influences the different tax rate, right? So a multifamily property, two, three, four families are gonna pay naturally will pay more taxes than a single family home. Location, because we already said that the taxes are by county or municipality, it varies. Although the tax rate average is 10,570, you may find lower or higher tax rate throughout our great state of New Jersey. So, this is all I have for you today. It was a great pleasure for me to be here with you and bring you this education to you. And again, remember, as a community, we could only grow and continue to do this every Wednesday. If you like and share this video with those that are in the process or looking to get into real estate, this is a great channel to come to and get your education or seek our services. It was a great pleasure again to be